Good morning and welcome everyone to our second installment of The Elephant in the Room, a hopefully lively conversation at the intersection between economics, politics and South Africa. My name is Michael Summerton and I look after marketing at investment platform Innate. A few quick housekeeping points. One CPD point will be awarded for this webinar. Because the content is general economic and politics discussion, the CPD point is only available to those who've watched the full webinar using your unique registration link. Of course, the information in this webinar is not financial advice, and a recording will be available later on in the week. Our next In the Room webinar will be on the 27th of July with Old Mutual Investment Group's Responsible Investing team, where John Duncan will join Stephen Backhouse to discuss all things ESG. This Friday, also keep an eye on your inbox for the monthly Scoop, our newsletter which contains the latest webinars, platform updates, and interesting snippets. And finally, please feel free to drop any questions into the Q&A box. I will be collating these and pitching the toughest ones back at our guests in the last 15 minutes of the webinar. Today, we have three esteemed guests with us. Annabelle Bishop, Chief Economist at Investec. Annabelle heads up a team which focuses on the macroeconomic, financial market, and global impact on our domestic environment. In addition to authoring articles and presenting to clients in a range of macroeconomic topics, Annabelle and her team also perform scenario planning and trend analyses. Our other guest is Kevin Lings, Chief Economist at Stanlib. Kevin has 30 years of experience in global and domestic economics and provides in-depth research and analysis to investment teams. A frequent market commentator and award-winning researcher, he also enjoys making watches in his spare time. And our special host for the hour is none other than Max du Preez, astute political analyst, author, accomplished journalist, and public speaker. Welcome, Annabelle, Kevin, and Max. Now, if SA Inc. were a real entity, one might even consider this to be the AGM, or at least the market context piece of it, as we find ourselves midway through a really tough year, risk and opportunity all around us. And having dispensed with the formalities like a true secretary, I'll invite Max to take over from here. Sorry, Max, you're on mute.
Rule 1, unmute. Thank you. I'm sure you're more interested in Annabelle and Kevin's thoughts, but a few introductory remarks from me. I don't need to dwell on all the multitude of crises facing South Africa right now, like the lackadaisical vaccination program, the fact that many municipalities in some provinces have become mini failed states, the continued ineptitude of the bureaucracy and so on. And on top of that, of course, a new 2-week lockdown, which will further decimate the hospitality and restaurant industry. We all know that, and we're all deeply depressed about the state of our nation. But I think it's time that we also take note of two huge shifts, of two big positives. The first significant shift is that political accountability is at last back on the table, and with a vengeance. And you know the facts. The Secretary General of the ANC has been suspended and he's in court on criminal charges. The Minister of Health is on special leave. He'll probably get fired tomorrow or the day after. The President's spokesperson was fired. The parade of shame of political crooks and state capturers before Zondo continues week after week. The National Prosecuting Authority and the Special Investigating Unit have gone into overdrive with almost weekly new criminal charges against corrupt politicians and civil servants and business people. I counted some 229 cases before court right now. And of course, there's the seizure of the assets of suspected criminals that we see on a weekly basis. We even have the chance of having the Gupta brothers extradited to stand trial. And in about 20 minutes from now, the Constitutional Court will sentence former President Jacob Zuma for contempt of court, while his real corruption case starts on the 19th of July. I hope this morning's sentence will be a jail sentence, or at least a form of house arrest, because a fine will make no sense. The second equally important shift is the new version of Cyril Ramaphosa that we've been witnessing in the last few months, especially the last few weeks, Cyril 2.0. He is suddenly becoming, or almost becoming, the president most of us have been begging him to be during the last 2 years. I think his repudiation of his most loyal cabinet minister, chairperson of the ANC, Gwede Mantashe, on the ceiling of private power generation was very significant and a real game changer. Shortly after that, it was announced that the first state-owned enterprise, SAA, was to be partially privatized. And then came the news that control over our harbors would be taken over by a new national ports authority. And if you listen to the president over the last few weeks, he is promising more vigorous structural reforms that would unlock growth. He's changed his whole rhetoric. He's voicing his impatience at the lethargy of the civil service, and he has significantly blamed cadre deployment for weak appointments that undermine good governance. So let's not allow our expectations to run away with us, but this, I would say, is undoubtedly Cyril 2.0. But the question is, why now? Why do we, after 2.5 years, see this? Why did he have to wait 3 years to let us see this side of him? He's a president who understands the economy. He knows what has to be done, and he hasn't been taking us there. And there can only be one explanation. Cyril Ramaphosa is now in full control of his party and its National Executive Committee. I still think his long game, his so-called long game, was too long, but it has worked. If he had taken these bold steps 2 or even 1 year ago, he would probably have triggered a palace revolution. He was waiting for the criminal justice system and the Zondo Commission to do their work, and they have. And the list is there, you all know it. Ace Magashule was his arch enemy inside Luthuli House. He's suspended, he's awaiting trial. Several leaders of the RET faction have been forced to step aside. In fact, all radical economic transformation faction activities have been banned, and Carl Niehaus's MK-MVA has been disbanded. And the father of RET, Jacob Zuma, is facing jail time. And all these steps were taken by the ANC's National Executive Committee, its highest policy-making body. It's not all plain sailing, though. I think if Ace Magashule wins his court case against the ANC, which I think is highly unlikely, but possible, Ramaphosa will be set back quite a few months. More importantly, Ramaphosa sits atop a very weak state with a talent-deficient cabinet, and the rot in his party, especially on provincial and local level, seems irreversible. I think Cyril Ramaphosa has survived the coronavirus epidemic quite well, better than many other heads of state of democracies. But the current third wave could seriously dent this position. The hartful factor is extremely strong. Hospitals are overrun, unemployment and poverty are going to increase once more. And the whole nation knows that if his administration had woken up early enough to procure vaccinations, and if they had learned their lessons from the first 2 waves and prepared for the third, it all would have looked very differently. So the long overdue cabinet reshuffle will be a litmus test. I think we can expect that very soon. The SIU is handing over their report on digital vibes and Minister Mkhize tomorrow, and that would certainly trigger the need for a cabinet reshuffle. And the question is, will he play it safe in terms of internal ANC politics, or does he cut out the dead wood and bring in seriously competent people? I wanted to talk a little bit about one of the ways in which his long game had worked, which is expropriation without compensation. But maybe we can do that later in the discussion. I think it's time for me to shut up and hand over the microphone to Annabelle.
Very much, Max. That was so interesting to hear. I look forward to what you have to say next on it as well. I'm just keeping an eye on the time, so I'll speak for 5 minutes. I think, just carrying on with the good news and particularly turning to the global now. Obviously, we are seeing vaccine rollouts around the world. We've reached the 3 billion mark, and I think that's, absolutely key. About a third of the global population, if not a bit more. And of course, this has been key in stimulating strong, positive financial market sentiment and, of course, supporting global economic recovery as well. But of course, as we know, global economic recovery started in the second half of last year. And in fact, we actually saw that with a huge boom in commodity prices, recovery in global financial markets, equity indices, and of course, as well, the rand itself began to recover, along with many other emerging market economies. In fact, we saw a strong focus into risk on, strong investment into yield-seeking opportunities. Of course, if we have a look at the global economy, that is in a strong phase of recovery as well. And we see world trade flows well above their peaks that they reached in 2018. So very strong performance, which was continued into the first quarter of this year. And I think, such has been the strength of this performance that global supply chains are now suffering from input shortages. There's very strong global demand, both on the services side and, of course, on the manufacturing side, as seen by global PMIs for many countries around the world. And as a consequence of that, many of them actually reaching their peaks. So we can be quite confident in saying that the global economy is underway with a very strong recovery, and forecasts of around 6%, if not somewhat stronger, look very real and rational. Commodity price strength has, of course, also supported the rand as well as a commodity currency. And the rand, even a couple of weeks ago, moving towards the 13.40 mark. Of course, the domestic currency is back towards about 14.30 at the moment. But nevertheless, it's indicative both of the strong positive sentiment and optimism in financial markets around the world towards yield seeking, towards emerging markets, because the rand is also an emerging market currency, and of course, towards commodities as well. If we actually have a look at the South African economy now, we obviously know that we are still beset by a number of issues and problems. The government finances, of course, are highly constrained, and there's an expectation that we're going to see, certainly put forward in the budget as an estimate, about 300 billion saved over the next few years, the 3-year medium-term expenditure framework. But of course, that comes down to the wage bargaining process and, of course, what is happening with unions in South Africa. And, South Africa has not seen a good tax take over the past decade. We've actually seen a declining tax take. We've seen a structural decline in the economy, structural decline in economic growth. And of course, all these points you've been talking to, Max, are absolutely key in turning this around, strengthening institutions, strengthening governance, and of course, strengthening government finances as well. That's absolutely key, as South Africa remains on the cusp of credit rating downgrades into the single B category. And of course, that has very negative implications for South Africa's bond market. In fact, if we actually have a look at the risk premium of South Africans' bonds, they remain very elevated over the US Treasury, for example. And of course, as well, even the spreads between South Africa's bonds on the 10-year basis, if you look in the short-term money market rates, the 5-year basis, have widened a lot as well, showing investor concern about the fact that we obviously have had such massively deteriorated government finances. If we look at South Africa's government debt at around 80% of GDP, that's well above that of middle income and other emerging market economies, which are closer to 60%. So of course, these are some of the downfalls. But as Max was saying, we are certainly seeing a very strong turnaround. Of course, bringing in here as well the improvements in the electricity side, bringing in self-generation, raising the limit substantially there. This morning I was reading about changes going on at Transnet, and of course reforms taking place there to also boost South Africa's ports and logistics. And that's of course highly important to actually get more of our mineral products out of the country and not miss the rest of the commodity boom. South Africa of course has missed a number of commodity booms in the past because we have battled from a logistical perspective, and of course as well from many of the constraints we've been talking about. The particular issue, I think, in South Africa going forwards now is to see this strength, these reform processes continue, and of course, as well, see the economy continue to strengthen. We are looking for an economic growth rate of about 4.5% for GDP this year. We are seeing infrastructure spend lagging, and I think, that is part of the issue in South Africa. There's some concern. Yes, we obviously can talk more about the coronavirus and the lockdown that we're seeing, but of course, a bit of weak demand to start off with in some areas. But as capacity starts to be used up, we are likely to start to see more infrastructure going forward. So certainly from next year and the next few years, we believe that South Africa will start gaining on an infrastructure spend and infrastructure drive. And of course, that will drive economic growth up towards the 3% mark as well. So we remain quite positive on South Africa, but as we indicated, we do still need to tackle the government finances and of course the electricity issues as well as the issues that Max mentioned, of course, the failing municipalities, and of course getting a lot more private sector involvement in the infrastructure sector. But I think I've hit my 5 minutes now. Over to you, Kevin.
Thanks, Annabelle. So I would broadly agree with both what Max and Annabelle have sketched out. I think there are significant reforms taking place in South Africa, political reforms and policy reforms. And I'm assuming we'll chat about that in quite a lot of detail. And that's obviously critical to the uplift of the South African economy. The 4.5% that Annabelle talks about, that's exactly the forecast that we've got. And we've looked at that number, taking into account the third wave. I did adjust the numbers slightly lower because of the third wave, but we're not yet at the point where we would radically adjust that. Obviously, it's critical that we start to get those infection numbers under control. And a lot of people obviously say, well, how the hell do you think you're going to grow at 4.5%, given some of the dynamics that's been sketched in this country? And I think we've just got to recognize that there's a massive base effect that is unfolding. The growth rate last year, -7%. So, to grow at 4.5% relative to that decline is actually not that difficult. And quite frankly, a lot of the 4.5% is just that, a base effect. We have, I think, got a fundamentally good agricultural season that's unfolding. Last year was also good. As Annabelle mentioned, we've got a very good commodity price effect, and we've seen that more and more in the mining sector. And I'm hoping that we can see some investment starting to take place in mining production. So it's not, I guess, all base effects. There are a couple of underlying positives, but the 4.5% primarily because we declined so much last year. Next year, I think the growth rate can also be well above trend. And again, people say, where's that growth coming from? And I think we've got to factor in pent-up demand. Let's assume that the vaccine rollout gains a bit of traction towards the end of this year into next year. And let's say that we reach some sort of population immunity by the middle of next year. You can imagine that we would be opening up stuff a lot more. So think about all of the sporting events, all the entertainment events, all the travel, all the conferences, all of that sort of stuff. And clearly that would then stimulate additional demand. And you would get a higher growth rate just on that basis. So in my mind, this year and next year, actually the growth rates can be reasonably good. The issue is that going to result in employment? And I would say, unfortunately, no. We've lost, over the last year, we've lost about 1.3 million jobs, both in the formal sector and the informal sector. And do I think we're going to get those jobs back in the next 2 years? And the answer is no. I think the third wave will probably end up with further job losses in the short term. And then we'll start to claw some of that back. But I don't think we're going to come anywhere near to clawing back the 1.3 million jobs. And let's face it, before we went into COVID-19, the unemployment in this country was desperate. So really the question then is, beyond the base effect and beyond the pent-up demand, can South Africa lift its growth rate more meaningfully on a sustained basis that would then lead to employment? And in order to do that, we need investment. We need both infrastructure investment and we need private sector investment. And we're simply not going to lift the growth rate without that investment. And in order to get that investment, we need these reforms. So the reforms that Max is talking about is absolutely crucial. The the electricity reform, the SAA, the port capacity, but we need to add to it. And we need to convince investors, private sector investors, local, international, that those reforms are going to remain in place and that they will be extended. And if that, I think, can be conveyed and it's seen in the actual evidence, then I think you'll start to get more investment. The private-public partnerships government's talking about is critical to that. So to me, the focus is much more, what is the growth rate in South Africa in year 3? Not this year, not next year, but in year 3. And are we able to start to revise that expectation higher? And if you see that expectation go up, then it's telling you that economists are seeing enough going on in terms of the underlying reforms in this country that will lead to that sustainably higher growth rate. At this stage, we haven't. We've got a growth rate in year 3 that still sits at around the 2% level. We haven't been able to do enough yet to really see those numbers move up. And while there's a lot of promise on the horizon, we've been promised a lot of stuff before. And so you're going to see this reluctance to really believe that these reforms that the president is pushing through will actually hold and will actually result in a sustainable pickup in investment. But I think that's where we are. That's where the focus is. Obviously, the vaccine rollout, that's absolutely critical. We can't get the growth rates without that accelerating. And I would suggest we've got to double the numbers from where we are now and then try and sustain that. So there's a lot of work ahead in terms of the vaccine rollout. Government's wage negotiation has to be bedded down. The unions have moderated dramatically, so they're a lot closer to what government is offering, but we've got to get the wage deal done. We've also got to start to sort out municipal finances. I've never seen a country become successful when local government is in disarray, and it feels to me like many smaller towns and even some of the smaller cities are in absolute disarray, and it's difficult to envisage sustainably higher growth while you've got this difficulty within municipal finances. So I would say that we've got those 3 hurdles at least in the short term: the vaccine rollout, the government finances, or the wage negotiation, and sorting out or trying to get on top of the deterioration in municipal finances, and then try and get the reform. So there's a huge amount of work ahead. But having said that, I'm optimistic that these reforms that the president is now implementing and announcing will actually be built on, and we will see private sector engage positively. So I've certainly become more optimistic in the last while, and hopefully very soon we can start to factor in higher growth beyond simply the next 2 years.
Thank you, Kevin. Some of the developed countries are literally spending their way out of the COVID crisis. We seem to have gone the austerity way. Can I have your views on the situation with our debt, foreign debt, and whether you would favor us spending more rather than being terribly austere? Annabelle?
Yeah, thanks, Max. Look, I think from our foreign debt perspective, it's very low. So that's only about 10% of our total issuance. I don't think we need to worry about that. The reason why it is so low is that South Africa has actually defaulted on its debt before. And that was in the 80s. And of course, that was as a consequence of the high levels of foreign debt we had then, and of course, movements in markets. So we've learned our lesson. And of course, instead, we have very high issuance of domestic debt. Now, we are at such a very high issuance already of debt that we can't really afford to exacerbate the problem more and fall down at the single B grade categories, because after that, of course, comes the C grades and then D for default. South Africa is at such a precarious position already in its government finances that we obviously have seen massive foreign disinvestment over the course of last year and this year. And that, unfortunately, has resulted in a big take-up in South Africa's debt by the banking system. So the Reserve Bank and National Treasury warn about a systemic risk building there if we actually do see the government continue to upswell its debt and, of course, risk default. And that, of course, could bring down the entire economy, the entire financial system. So it's a very dire position. But your question, I think, was rather, what more could we do for fiscal stimulus? And, of course, what's been happening globally? And, in the United States, they've had massive monetary stimulus, yes, but also, of course, fiscal stimulus as well, and looking to go into infrastructure stimulus as well. And we see that in Europe, of course, and many other countries, well, many other developed countries, even in China. Now, South Africa has actually seen some quite significant stimulus compared to other emerging markets. And of course, that's been our 500 billion fiscal stimulus. That includes a loan guarantee scheme, although not quite as successful perhaps as was hoped because of the fact that there were some issues and many companies not wanting to take off more debt. But interestingly, we're finding among our clients now quite a few companies are quite cash flush and they actually are keen to embark on infrastructure investment. But of course, what's holding them back, Max, is that uncertainty you were outlining earlier, the government policies, uncertainties. Will Cyril Ramaphosa get a stronger hold? Will we actually see mainly stronger economic demand? Because that's really the big driver for corporates. When you start to see strong demand coming through, then the expectations of profitability rise, and then, of course, they start to expand and invest. But, can South Africa do more on a fiscal stimulus side? Well, sadly, we've wasted our government finances over the past 10 years. Just as we had an unemployment rate of 21% in the 2000s, it's now gone to 30% by 2019-20, so too we're in A-grade credit ratings and in a fiscal surplus. And of course, we've wasted that with 10 years of misgovernance, misrule, and of course, the corruption, looting, and everything you've been outlining as well. And that, of course, has now seen us in a position where there's very little more we can do. Instead, unfortunately, Max, we actually have to cut back. We have to cut back in terms of our expenditure on civil servant salaries and wages so that we can actually free up space. So government can actually spend more on infrastructure because, unfortunately, the massive upswelling of debt has been expenditure to a large degree on civil servant salaries and wages over the past decade, and that's come at the expense of government investment in infrastructure. Of course, we've seen the problems at the SOEs as well. So sadly, we have to rethink this. We can't just launch into more debt and spend freely because actually the past 10 years was huge fiscal stimulus if we look at it from that perspective of debt expansion, though sadly it leaked out the system and wasn't spent wisely or efficiently. So I think South Africa, in fact, actually has to stop looking for quick wins and low-hanging fruit. We now need to actually knuckle down and do the reforms that the president is driving and actually allow ourselves to see a much more solid foundation of economic growth going forwards, but particularly improve investor confidence in the country by protecting property rights and, of course, as well, bringing through the reforms that are needed in order to engender greater confidence and investment, because that will certainly drive stronger growth going forwards and, of course, help in bringing down unemployment significantly.
You want to add something, Kevin, or shall we move along?
Just one thing to add, Max, is that as Annabelle mentioned, the government debt is 80% of GDP, but critically, the interest cost of debt is 20% of our total tax revenue. So while many governments have a higher debt level, the US government debt is over 100% of GDP, it's always this temptation of, well, can't government just spend more? The limitation is not the total debt. The limitation is how much does it cost you to pay this or service this debt? And I would say that 20% is excessive and you can't just keep pushing that. So I think government actually had no choice but to try and effect some discipline just from that point alone, let alone all of the other issues.
So no NHI and no basic income grant?
It's just not affordable at this stage. You need a much better tax base. You need much better economic growth. You need much better employment numbers. I don't think any of those things would really result in a meaningful delivery. So if we tried NHI, I think it wouldn't end up being that effective. The sort of national income grant, if you like, how much could you really do? It would be exceptionally low, even if you tried it. No, there's no alternative to higher growth and employment. There isn't a shortcut to that in this country.
I have this sense that our state is a lot weaker than we generally think. And we think it's stronger because our private sector is so strong. Our civil society is so strong. I mean, the gap between state and private sector is bigger than I've seen it in any other society, because we have quite a talented, energetic, vigorous private sector And we really have a very weak state. So, Kevin, you were just talking about public-private partnerships. What is the relationship? What is the appetite for more of this, for more of a toenadering between government and private sector?
So if you go back a few years, many economists were suggesting to government that they look at private-public partnerships. You could see that government's balance sheet was wrecked, that the SOE balance sheet was wrecked, that private sector balance sheet was strong, and that in order to grow the economy, you need a balance sheet. Somebody's got to have a balance sheet. So the suggestion many years ago was to do private-public partnerships, and government rejected that. I was certainly in many meetings myself where it was put on the table, and there was no appetite to that. When we look at it now, there is an appetite. In fact, within the president's office, there's an infrastructure team, and that infrastructure team is now very actively exploring private-public partnerships. The president talks about it quite substantially. The Minister of Finance talks about it. I think there's a broad buy-in to that. So why the change in heart? Well, in simple terms, when the money runs out, the ideology runs out. And I think that what's happening is government is willing to embrace private-public partnerships because it recognizes that government is so weak, that the institutional capacity in government has deteriorated, and that the balance sheet in both SOEs and government is wrecked. And so you see this idea of private sector energy provision, the privatization of SAA, the port capacity, which has been spoken about as being partly including private sector involvement, etc. And I can see that we're going to see more of that because there is no viable alternative. What's really sad is that we had to wait to the point where government's finances have been pretty much destroyed before you make that decision. I think the private sector is, from my perspective, more than willing to get involved. We talk quite a lot to investors and say to them, what's the limitation? Is it money? And the response we constantly get, it's not a money problem. There is money available locally, internationally for the right sorts of projects. What we need is deregulation, allow the private sector more involvement, and then you'll see the investment. What I don't, and Max, you look at the politics a lot, so you'll probably have a better sense of this, is what I don't get here is that if you do private-public partnerships, everybody stands to win. In other words, let's say that you did PPPs for water supply. Government could then, in the local municipality, say, look at the water we provided, vote for us. The citizens would be happy because they would have water. Private sector would be happy because they're doing investment in water. I just don't see where the downside is. Yet you still get a sense, an ideological sense, that there's a reluctance to fully embrace private-public partnerships.
Yeah, it's that populist virus that has infected our politics. I mean, we look at energy. What Ramaphosa had done with upping the ceiling of private power generation is so clearly the obvious thing to do. It's so clearly a solution. We don't need dirty ships in our harbors. If we can get good investment in sustainable energy in the next 18 months, we will basically solve our energy problem. So without the government having to spend money, and yet the RET faction and the EFF are just shouting privatization, this is an anti-black move. I think a lot of the stuff we're talking about, we just run against a wall of populism, EFF and RET type populism. That's a bit of a problem. While we're talking about energy, Annabelle, what do you think of the prospects of our energy future and Eskom? What do your guys' research tell you?
I'm quite positive about the RP 219. I believe that if we implement it, and I think it's getting impetus now from the presidency, and of course from this newfound confidence you talk about in his office, and of course, in his support, then I think we actually will get through the electricity shortages we are experiencing in a few years. I think that it's quite key to note that there obviously have been these legacy issues. I think you mentioned them yourself, with the nuclear, with Jacob Zuma, and of course, many people standing to benefit. I think as well also the politics in South Africa had become so degraded that it was impossible to actually put anything forwards because everyone wanted to have their fingers in the pie and benefited from a corruption and looting perspective, yes, but also of course as well just from kickbacks and tenders and all sorts of other areas that unfortunately, if we have a look in countries globally, the most corrupt countries globally tend to be the ones that are the most communist, the most highly socialist. And of course, South Africa going down the populist policy path in the past decade, and of course, seeing the destruction of institutions and state capture, fits in a lot with these high levels of corruption and of course, the communist stance that we've seen. And, looking at the politics over the past decade as well, you saw that RET faction always talking about increasing the size of government, its control of the economy, its command of the economy, its ownership of the economy, nationalization of the economy, and of course that's where nationalization of the healthcare sector comes in with the NHI, etc. Of course, government's had its attempt now. It's done the nationalization, increased nationalization of the healthcare sector and the rollout of the vaccines. And of course, it's been shown to be slow, insufficient. We're the worst performing country out of the G20 in terms of vaccine delivery. So we are finding ourselves in a situation now that if we go down the road of further nationalization of the health, the health sector, it's not likely to yield any better results. So I think, this realization in the ANC now is so positive that we need to turn away from the old ways that they've been following, which have not served the economy well. I mean, the structural decline we saw in economic growth over the past decade is also due to substantially higher taxes, government crowding out the private sector, with its huge debt and interest costs, and obviously crowding out private sector investment. But of course, as well, also the fact that we have seen those electricity shortages, the massive rundown in electricity production. Of course, if we really are going to see stronger economic growth, we actually cannot do it without stronger electricity production. And I think, from that perspective, seeing the president put his foot down, and, Gwede Mantashe, obviously being quite socialist as well, but the president also socialist leaning as well. But I think actually putting the foot down and actually saying, well, I'm sorry, but we actually are going to have to go into a strong drive for increase capacity of electricity in South Africa, and we're going to have to start making the changes that we can do as soon as possible. I think we're going to start seeing that RRP 219 really pulling ahead if we continue with these reforms, Max, that you mentioned, if Cyril Ramaphosa maintains the support. So, I'm quite optimistic on that. But that said, we must remember that the very old aging power stations are going to start to run out. Increasingly already, they've obviously battled from lack of sufficient repair or just old age, like any old motor engine. And of course, as a consequence of that, they're going to break down more and more. And that was actually the reason why we saw load shedding recently as well. Shortages, of course, the problems at Medupi and Kusile as well, the poor builds that happened there, with the looting, the state capturing and all that happened. So I think if we can manage to start bringing in good governance, if we can manage to start bringing in skilled individuals and turn the ship around, then yes, we could in a couple of years start to see sufficient electricity production. It just, I think, so much depends on the politics. And as you said at the start, this is why the long game has been played. Let's hope we gain traction from here so we can bring in the private sector into the electricity, particularly in the renewable sector, because both globally and domestically, they are very poised to do so.
I think one positive has been the figure of Andre de Ruyter,
yes,
who wasn't a comrade who was deployed. He came straight from the private sector. He's not from an ANC background. He's not a political figure. And when he was appointed as the head of Eskom, there was a lot of resistance from EFF and RET and others saying, they're pushing out black managers. And then came the whole thing that he's a racist. And that was debunked completely. And I suddenly sense quite strongly a national support for this guy, who has a very good manner. He's a straight talker, and he seems to be a very good guy to have at the top. And I sense a change in mood that if we really have a crisis, instead of going for an affirmative action or cadre deployment appointee, let's just get the best guy for the job. So I think that is a big positive. He has very high, Andre de Ruyter has very high national approval ratings, which is quite unusual. A quick word on property rights that you mentioned, Annabelle. I think it's known that Cyril Ramaphosa's grouping have been very much against changing the constitution, but they lost the battle at the Congress in 2017. That was Zuma's farewell gift that the ANC said we got to change the constitution. I think Cyril has played his long game very well, though. He's kicked for touch so many times. It was commission and committee after the other, one after the other, and consultation. And 3 years later, we're still nowhere. So what we have at the moment is a deadlock between the big three parties. The deadline for a change is upon us. And the EFF and the ANC and the DA can't agree, and they need a 2/3 majority. And I think this is what Ramaphosa had planned, because what seems very likely now is that they will not change the constitution, but instead rely on the expropriation bill, which is, of course, what they should have done from the beginning, because the constitution never excluded expropriation without compensation on very specific grounds. And my personal view, and I would like to hear yours, is that the expropriation bill before Parliament is a good piece of the legislation. It takes care of property rights, multiple checks and balances, no excluding of the courts, and it spells out the only 5 sets of circumstances where compensation can be well below market price or actually zero. And I think if the first time that bill is used to expropriate, it will go to the Constitutional Court. And I think the Constitutional Court will fine-tune some of the vague words. Your quick view, Kevin, on property rights and where we stand?
Max, I'd agree with that. It doesn't look like the Constitution will be changed at this stage. I think the ANC and the EFF are too far apart. And I would say, thank goodness they are. So I think that it does leave us with the expropriation bill, and I would agree with you. I think that's a better outcome. The one thing I would just add, though, is that we need to see how this is likely to work in reality. You've still got, because of this confusion around changing the constitution and different ideas, there's still at the base of it uncertainty about how do we deal with land in this country. So from an investor point of view, it remains one of those policy uncertainties that we've got to bed down. And the other area is that we've still got a massive land issue that we haven't made progress on. So to me, the quicker we get away from this debate about changing the constitution to how are we going to implement this? How is it going to work in reality? And everybody gets comfortable with this is the way it's likely to go. Then I think it's off the table as an issue. So I'm not concerned about it being a long-term issue in South Africa, but I do think we've got to move to implementation stage as quickly as possible.
I think the emotive part is agricultural land, but that's not the biggest problem. The biggest problem is urban land. We have so-called service delivery protests and land invasions virtually every day, because government is not executing its own plans of redistributing state land, giving people a piece of land in the city. So, Annabelle, your view on property rights?
Yes, Max, I certainly agree with what both of you have said. I think what's also quite key as well is that, if we were to change the constitution, we would probably have to change the expropriation bill as well. And of course, that would set us back very far as well. So certainly, the long game is definitely being played in South Africa. I think, part of the problem is the socio-economic side. We've had such very high levels of unemployment, youth unemployment, and of course incredibly weak destructive growth of the past decade, which has allowed these populist policies to come through increasingly, that obviously turning the economy around and having very strong economic growth and pulling the excluded into the economic net will obviously satisfy some of the desperation that we are quite rightly experiencing in the country. I think that the problems that we're certainly finding is that politics and political parties exploiting the poor's desperation for their own political gains, and certainly looking to delve down into deeply socialist and communist political party origins, which will not necessarily be successful or helpful for the poor, and actually could find them in a much worse place than they have been. And I think we saw that in the past decade already, that strong move to socialist and populism, and in the ANC. But I think that moving into this new area away from the RET factions and into the strong Zuma support, if we can actually get private sector involvement, if we can remove this bureaucratic, suppressing red tape and regulations that are really stifling investment in the economy. If we look at the manufacturing sector, for example, it is so difficult for the heavy manufacturing industry, the foundries, that many of them are actually shutting down. They're in their twilight years. We're finding that environmental legislation, EIAs, are very difficult to get through, to get past. We're finding that regulations which were previously deemed approved are obviously now for many, in a situation where they're told, well, no, the letter that you issued is actually incorrect, and you're going to have a very large fine. Directors can be put in jail. All of these confusions, the manufacturing circle themselves talks about the enormous suppressing level of regulation, the complexity that it's so difficult to follow. I think there could be an enormous release of economic growth in South Africa, and therefore enormous improvement in employment, if we could actually really par down the regulatory burden that the private sector is facing instead of actually increasing it. And unfortunately, a lot of this is coming from the DTI. A lot of the very heavy regulatory burden is coming from the DTI. They continue to propose more and more regulations, more and more bills, and make it more and more complex to do business in South Africa. And unfortunately, that is not going to be the solution for stronger economic growth in South Africa.
Yeah. Unfortunately, even the good guys in cabinet are wedded to the old style of more control. I mean, people like Ibrahim Patel, he's an extremely hardworking, very honest guy, but he's obsessed with micromanaging everything and limiting everything. And they're very suspicious of private enterprise. Even Pravin Gordhan, whom we all respect and love, he really just couldn't let go of SAA. The old instincts just kick in. Anyway, there we are. I think it's time for question time, and I hand the control room back to Michael.
Thank you, Max. Annabelle, it's been most enlightening, and we've had many questions come through. I don't think we're going to get to all of them, but I've distilled a few themes, and maybe just to rest on the one kind of main political theme that's coming through is this question around Cyril Ramaphosa's next term. So a lot of this supposed reform is resting on him. And what are some of the risks facing him, not being re-elected as party leader and president with the next round?
Yeah, well, we need to look at who could challenge him. There's no obvious challenger at the moment. Magashule sort of pretended that he was going to challenge Cyril next year when we choose a new president for the ANC and then for the Republic. But I think Magashule is history. He's probably going to go to jail. He's damaged. Maybe I should entertain you and say there's a very young man who walked into an ANC branch in Durban last week and said, please make me the chairman of this branch because I want to topple Cyril Ramaphosa as president next year. And his name is Duduzane Zuma. And I thought the whole country will burst out laughing because here's the boy from Dubai, a complete parvenu, but he has ambitions. And a lot of people take him seriously. So I don't think we need to take him seriously. I think there's a threat from people like Lindiwe Sisulu inside the cabinet. She might also be excluded in the next cabinet reshuffle. So at the moment, it looks like Cyril Ramaphosa is firmly in the saddle. There's nobody challenging him. But if the third wave, and if there's a fourth wave and a fifth lockdown, things will look ugly by this time next year. It also depends on how well the ANC is going to do in the local elections, if we have them in October. Fortunately for him, the opposition parties are fairly useless. The EFF has reached the ceiling. It is now screaming and shouting and doing absurd things like fighting for people's lives against COVID by organizing a mass rally without masks, and they think that works. It doesn't work. People saw through that. So no opposition, really. The DA is astonishing how they sit in a corner doing damage to itself. But if we do not have Cyril Ramaphosa, we're going to have somebody who's less committed to innovation and renewal and clean government. So it's in all our interest. I know it's not a popular thing to say, but I think it's in all our interest to say, let's hope Cyril has another term.
Thanks, Max. One more political related question is the level of prosecutions that are underway. So you mentioned Ace Magashule, and those are kind of the headlines that we see. And thanks to Gareth for the question, but could Shamila Batoy be doing more? Are there cases in progress that we don't actually read about in the media in terms of prosecuting for corruption?
Yes, as I said earlier, some 228 cases before the courts at the moment. And the media, I mean, we are, and the media is so understaffed, we don't get anywhere to reflect this whole picture. It's not so much Shamila Batoy, it's more the special directorate of Hermione Cronje. She is running this anti-corruption thing, and it is quite a formidable machine. But to overcome the hollowing out of the NPA over the last 10 years was hard. I think they have picked up speed, and I think we should be grateful at their efficiency right now. Our courts themselves have issues now because 228 cases, complicated cases, take a lot of magistrates and judges and prosecutors and so on. So I think I'm fairly happy with what the NPA and especially the Special Investigating Unit have been doing.
So turning to, I guess, an economic type question is, and I know that Kevin has been quite passionate about setting out, very pragmatic and practical ways that we can solve some of our structural issues in South Africa. But a question that came through was, how do we solve, on one hand, this kind of huge youth unemployment and be competitive, not short term, but over the next, say, 20 years? We're unlikely to be cost competitive as a manufacturing economy, and our education system, leaves a lot to be desired. So any thoughts on that?
Michael, I'll try to do two quick thoughts. The first is, I think that we rely too much at the education on an academic qualification and not on a technical qualification. And I would say in South Africa, there's an urgent need to revamp the education system to allow for a technical stream that gets developed in grade 10, and that it links up much more closely with industry and perhaps goes and beforehand investigates Germany, etc., to see how these things have worked elsewhere. But I think it's something that we've got to say, not everybody is interested actually in an academic qualification, and that the country would better be served by more technical skills that we develop early on. The second is that I think we've got to understand where we can compete. We can't compete against, so let me pick something silly like shoes. So we can't compete against high-end shoes, Italian shoes, designer shoes. We just don't have that for a whole range of reasons, part to do with the history of shoe development in Europe. Equally, though, we can't compete against the low-end Chinese shoe. We just don't have that cost of production. So I don't think we should try. When you walk into a shoe shop, do you buy automatically the cheapest shoe on the shelf? You say to the sales assistant, I'm not going to look around, just show me the cheapest shoe and I'm going to buy that one. And nobody does that. Well, not nobody, very few people do that. So what ends up happening is that price is not the only determinant of whether something is competitive. It's got a lot to do with the quality. It's got a lot to do with the design. It's got a lot to do with, can you provide the variety? Can you provide the goods on time, etc.? And that middle market is where South Africa could potentially be more competitive, where it's not just about price. And I think that if South African industry looks at it in terms of where's that middle market, it's not sexy, it's not the cheap market, it's not the high-end fashion market, it's the middle boring market, but it's actually the bulk of the market. And I would say that we don't exploit that nearly enough. There's no intrinsic reason why South Africa couldn't be more competitive in that segment.
Thanks, Kevin. Maybe one for Annabelle. Talking to pent-up demand and perhaps some inflationary risks around the globe, is there, looking forward, any scenarios around rapid rate rises, perhaps here or in, say, the US, for example?
Yes, well, I suppose it has been stoked both by the fact that the United States has seen a very sharp increases in inflation, but of course, globally, we've seen the base effects kick in from the very low commodity prices of a year ago that is pushing up inflation in South Africa, around the world, and of course, leading to anticipation excuse me, of higher interest rates, and of course, even of QE tapering in the United States. Now, I think, it hasn't been helped by our Reserve Bank Governor, Lesetja Kganyago, talking about higher interest rates being necessary in South Africa, a normalization of interest rates, and of course, the fact that we are seeing a very weak credit supply. Private sector credit extension is actually contracting, yes, on a year-on-year base effect, but in fact, actually also on quite a few months as well. So we are seeing weakness in the credit space. So we're not necessarily seeing enough monetary support overall coming through into South Africa. But that said, our view is that we're not looking on a base case for higher interest rates in South Africa or in fact in the United States. And of course, if you look at the FOMC's members forecasts, the dot plot graph, it shows that we obviously find ourselves in a situation where the dot plot certainly indicates that the FOMC members are looking to hike rates in 2023. So, of course, quite a while off. But the question is, can that be exacerbated much quicker, much faster? And of course, yes, it obviously can if we do see inflation rising by even more than we've seen. In fact, another big jump up in inflation. And, we're not necessarily expecting that because we obviously find ourselves in a situation where we've already seen this big hiking up in commodity prices. And we're not looking for another massive commodity price lift again. In other words, the same boom replicated again. So we're seeing commodity prices, for example, 80% higher year on year for some commodities because of the collapse last year. We're not looking to see another 80% jump in commodity prices. Yes, oil prices are quite high, and I think that perhaps maybe is the big risk we're facing. At $75 a barrel, some market expectations are saying, well, they could go to $100 a barrel. And, risks for next year particularly. And of course, if that happens, then we're going to see much higher inflation pressures come through. Really, we're seeing in South Africa, there's a bit of a petrol price hike building for July. So, while the oil price is rising so substantially, of course, we're seeing OPEC's always very keen to hike, to increase quotas whenever it needs to do so to push up prices, but not very keen to relax them. And of course, with the global shift away from fossil fuels that we're seeing under the Paris Agreement, with, all the agreements that many nations and countries are obviously bound by, we're going to see a further shift away from oil and from coal. And I think that OPEC is probably trying to make hay while the sun shines. So if oil does go to $100 a barrel, maybe they'll feel this is their last gasp because, globally around the world, we are going to be seeing increasingly, this decade, but certainly over the next few decades, reduction in fossil fuel usage. So I think that's probably the risk. I expected cases not for interest rate hikes in South Africa, although Lesetja can always surprise us, and he has in the past. But, the economy is so weak. And of course, we are seeing these damaging restrictions coming through in many sectors of the economy, unavoidable restrictions, because we have to get the cases under control. We've seen COVID's got completely out of control in Gauteng, and it's very damaging to many lives. We're seeing, as we know, many people have to go to other provinces for hospitalization. We cannot have that run across the whole country, because where would we send people for hospitalization then? So this is what we're finding ourselves in. Risks to the upside for inflation, but I don't think we're there yet.
Thanks, Annabelle. We have officially run out of time. I want to sneak one last theme of question in, and that's around SARS and the tax take. So, obviously on the one side, we're spending a lot of money as a country. On the other side, you've got the theme of wealthy people just packing up their bags and leaving. And so the tax net is potentially shrinking, and business activity is also less this year from COVID. So are we at risk to see any kind of wealth taxes coming through for tax year next year? Kevin, looked like you had something to say on that one.
So I think overall, National Treasury has pushed back against tax hikes or significant tax increases for good reason. I think it sees it as counterproductive. So I'm not expecting that government will suddenly increase taxes because it feels that there's a shortfall. You're right in the sense that the tax situation is under pressure, and to some extent that just reflects the low growth environment. And if you want more taxes, you've got to generate more economic growth and employment. In the very near term, though, we are being surprised by the commodity price cycle and how that has helped our tax take. So in the very short term, we actually seen upward surprises coming through, and we're able to revise some of the fiscal numbers as a result. So yeah, I mean, at some point you could imagine that the government gets desperate and that there's just no growth, and now it feels it's got to tax whatever it can. That's entirely feasible. I don't anticipate it in the short term. The real answer is do this deregulation, get the investment, get private sector involved, lift growth, lift employment, and the taxes will take care of themselves.
Thanks, Kevin. That's all we have time for, I'm afraid, today. Thank you so much for joining us for the elephant in the room. Thank you for all your lively questions. I'm sorry we couldn't get to all of them. It has been a pleasure. Thank you, Annabelle, Kevin, and of course, Max. Do look out for your CPD certificate and keep an eye on your inbox for future invites. Stay warm, stay informed, and from Innate and all our guests, bye.